Today's breakdown goes deep into the forces shaping XRP's movement, the broader market reaction after the recent FOMC meeting, and the structural changes happening beneath the charts that could influence XRP's long-term direction. Hey guys, welcome back to Whiteboard Crypto Update. In today's video, we will talk about XRP, so be sure to stay focused as you surely don't want to miss out on this. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads. Please remember this is not a financial advice video. The crypto market has been reacting sharply after the latest statements from the Federal Reserve, and this has created noticeable volatility across all major assets. Bitcoin briefly slipped under the 90,000 level, Ethereum retreated toward 3,000, and XRP has been hovering tightly around the crucial $2 zone. While these numbers may look like simple pullbacks on the surface, the underlying behavior tells a different story. The year was expected to bring 6 rate cuts, but so far the economy has only seen 3. This shift in expectations has created uncertainty, and markets often struggle when expectations and reality fail to match. Meanwhile, traditional assets such as gold, silver, and major indices continue hitting or approaching all-time highs. This has created an unusual disconnect. Stock markets are booming under the same macro conditions that are putting pressure on crypto. One reason behind this divergence may be that the crypto market is still reacting to the aftershocks of major liquidity events that occurred earlier in the year, events that caused forced selling, position unwinding, and shifts in risk management across several trading desks. These effects do not disappear in a week. Sometimes they take months to fully settle. And many analysts believe the market is still digesting those impacts. On top of that, risk appetite itself has changed. A few years ago, crypto was the primary home for high-risk speculation. Now there are countless alternative platforms, prediction markets, sports-based platforms, financial gaming apps, and more, competing for the same pool of risk-seeking capital. This potentially reduces the inflow of speculative money that previously boosted crypto in fast cycles. Meanwhile, emotions play a bigger role than most traders admit. When prices rise, the excitement creates a dopamine rush that makes investors expect even more gains. When prices fall or stagnate, the emotional response is far stronger. This imbalance often causes irrational decision-making, panic selling, or fear-based analysis. Understanding this psychology is critical for navigating volatile markets like crypto. Currently, XRP is moving tightly around the $2 range. Bitcoin has shown a clearer trend pattern on higher timeframes, but XRP's movement is more irregular. There is no perfectly clean trend line, yet price behavior suggests traders are watching this zone closely. If the broader market continues to soften, XRP could feel additional short-term pressure. If the market stabilizes, XRP may attempt to rebound from this support zone. Some external factors are also influencing the crypto market. Overnight stock futures showed weakness, triggered in part by concerns surrounding major players in the AI sector. Recently, any negative commentary around AI, whether justified or not, has caused rapid declines in tech stocks. Because AI is currently the hottest and largest sector in the traditional market, these drops often spill over into the broader financial environment, sometimes affecting crypto sentiment indirectly. But despite short-term uncertainty, XRP has shown notable on-chain strength. Since the launch of XRP spot ETFs, the asset has recorded 19 consecutive days of inflows, a rare and impressive streak. Total inflows have nearly reached $1 billion. While no market sees inflows every single day forever, such a consistent start is a sign of growing institutional interest. Additionally, the XRP ledger is evolving. Upcoming upgrades include on-chain lending and borrowing, enabling decentralized loan markets, dynamic NFTs, a new mechanism similar to dynamic NFTs. These features are introduced but still in development. They will require voting and implementation, but they show active modernization of the ecosystem. A blockchain that continues to innovate typically strengthens its long-term position. Another interesting comparison comes from traditional markets. The Russell 2000 index, representing mid-cap U.S. stocks, has recently shown strong recovery after years of stagnation. For more than a year, these mid-cap stocks remained flat, while large indexes like the S&P 500 continued rising, driven mainly by a small group of mega-cap tech companies. This created a major imbalance. Crypto had a similar pattern. It surged strongly into late 2023, fell sharply due to major collapses, then rose into 2024, and then began another corrective phase. The timing and behavior of these cycles resemble the Russell's movements. But recently something changed. While the Russell rebounded strongly, crypto, especially Bitcoin, continued dropping instead of following. This suggests another force interrupted the natural rhythm. Many analysts point to the events around early October, where large positions were potentially liquidated or adjusted. This could explain why crypto is temporarily out of sync with its usual macro correlations. If true, once this unwinding process fully completes, crypto could realign with traditional market behavior. In previous cycles, miner behavior heavily influenced the timing of bull runs, but with ETFs now dominating inflows, managed by institutions like BlackRock, the influence of miners has decreased. The structure of the market has therefore changed. Historical patterns still provide guidance, but they no longer dictate the outcome as precisely as they did in earlier cycles. History rhymes but does not repeat exactly. This cycle is proving that once again. XRP's long-term trajectory still depends on many factors: institutional flows, adoption of the XRP ledger, market liquidity, and overall crypto sentiment. The current disconnect between crypto and traditional markets may simply be temporary as capital rotates between sectors. Stocks, AI, mid-caps, commodities, and crypto all compete for attention in an environment where interest rates are shifting and global liquidity is fluctuating. In the end, the key takeaway is that XRP's current behavior cannot be understood by price alone. The inflow streak into ETFs, the upgrades to the ledger, the macro conditions, and the change in how markets behave all contribute to the overall picture. Whether the market continues down temporarily or begins recovering will depend on how these forces interact in the coming weeks. This analysis is meant to provide an overview of the broader landscape shaping XRP's movement. It is not financial advice. Always conduct independent research before making investment decisions. What matters most is understanding the forces behind the charts, not reacting emotionally to every movement. The market is evolving, and adapting to these changes is essential for navigating the next phase of the crypto cycle. Well, guys, that's all we have for you today. What are your thoughts on XRP? Get involved and let us know in the comments down below. If you guys like this video, then be sure to give this video a big thumbs up. Thank you for watching, and we will see you again in the next video. Goodbye.